Last concur with your permission of the House, I hope propose to share time with Deputies Joe Costello, Sean Sherlock and Jan O'Sullivan on a division of 10.776. The first thing I want to say is that I'm sorry Deputy McGrath has left, because I thought his speech a very reasonable one from the government's point of view. Also found it, I hope he doesn't find it condescending if I say it was fairly well informed in terms of its economics. I just want to set out a number of points. His speech, for example, contrasted with what you could only call a kind of hectoring, abusive speeches directed at the Labour Party. For a start, I'll only deal with one fact, which is that this proposal that is before us this evening comes from the Labour Party's earlier document, Investing in Our Future. And that document was there for anyone to read. It suggests that the real economy is where we have to take government action, and quickly, and that within the real economy, the unemployment problem is the biggest problem. Now, I haven't the time in the 10 minutes that are available to me, but if one looks at the cost of the unemployment as it rises past 14%, you will then immediately see that the deficit is accounted for by maybe 40–50% by the cost of unemployment. And what I want to suggest is that what the government's policies are doing are turning a recession into a depression. It is basic economics as well, I suggest, given recent economic history, that if you deflate the economy to the extent it is now happening, both in terms of government action, combined, for example, with a massive increase in savings, the net effect of shrinking the economy like that will in fact drive the unemployment rate even higher. Now, as I said, I can only speak in a few truncated statements about this, but what the government seems to be suggesting, and indeed in the little handbooks it prepares for its backbenchers, is we are repairing the banks, we are recapitalising the banks, we are going to increase competitiveness, we're going to achieve growth, and so forth. Well, I'll point out that in the Finnish economy, which went through a crisis like ours, you had a return to growth in single figures, but the unemployment rate didn't drop for a full 5 years afterwards. I want to just clearly state where we are on this. I suggest that the government has not dealt with the real economy and the social disaster that are the unemployment figures within it. And I also want to say that those who are affected by the disaster that unemployment is, not just the loss of a job, but the exclusion, the misery that we've heard from many other speakers, that all of that is something that cannot wait 5 years. The other part of it, which is very important, is the bland way in which the return of immigration is being accepted. 100,000 people in 2 years, people who have come through an educational system described by the European Union as among the most flexible, highly talented workforce in Europe, and they are to be exported. I could point out two others. So if one either engages with the employment protection, employment creation problem, and one doesn't. Again, I attended Farmley, for example, where we had many presentations in relation to innovation, research and development. In the task document published recently, I think it is Dr. Tom O'Connor points out, we have 10,000 PhDs working in Ireland. And of those, I think that the figure for something like that is that we have about 350 incubator units working in third-level institutions. And of these, 13 have spun out tradable companies, but they have almost immediately been bought up by foreign multinationals. In other words, having subsidized the research and development, instead of getting the hundreds or thousands of jobs, we allow, if you like, the taxpayers' investment in research and development and in innovation to be consumed by the sheer power of money. Now, I do wish, and I note that our debate this evening has been welcomed by some, but really, when people come out with mantras like the response of the markets, let me state it again, I have stated it and written it elsewhere, that one of the findings of the last crisis, our particular one, and the more general one in global economics, is that there is no such thing as market rationality. I cannot think that the number of speakers, one after another on the government side, spoke about messages from the markets. Well, this is like about the fourth secret of Fatima, frankly. It is about the same status. There is no market's irrationality. And I would also say to you about the references that were made to Greece. What a pity no one will speak about the sheer speculative criminal activity of Goldman Sachs in relation to the Greek currency. But not only in relation to the Greek currency, but in relation to all of the housing bubbles in the United States itself. Sheer criminal behaviour that, to the credit of the United States, it has the capacity to face and to examine. What is involved here, for people who are watching it, is this. You've heard about whatever is left in the National Pension Reserve Fund. Someone was dismissive about the Labour Party's proposals before to use such funds for infrastructural expenditure. The reality of it is, if you don't take your $2 billion out now, put it into an strategic investment bank that will provide infrastructure. And you know, ministers are talking about it. You are at the time where one could find schools, clinics, roads, all at the most competitive price one could have had for decades. At a time when you have unemployed engineers, architects, 1 in 3 male people who are involved in the construction industry, and yet the government contracts its capital expenditure. In fact, capital spending will go from 5% of GNP in 2010 to 3.1% in 2016. So the very time when you should in fact be reflating the economy through getting good value in social infrastructure and creating jobs and thereby reducing the cost of unemployment, one is in fact doing the opposite. And then one is in fact filling the gap with phrases about making the banks fit for purpose. Now, the public watching, I just asked them one question. Do they see down the road, after 22 billion going into the black hole that Anglo is, that Anglo will come out ever at the other end, lending 1 red cent to anyone who will ever work in Ireland? And the answer is it won't. Everybody knows that. And yet at the same time, we're going to have a vote tonight at 8:30 on $2 billion from the National Pension Reserve Fund that would in fact fund infrastructure, that would capitalise the spin-out companies that are coming from research and development, that would have been available for in relation to the refit in relation to technology. And people are saying, you must repeat the Fianna Fáil party line, we're repairing the banks, by putting 22 billion into a bog hole. Now, I think that this is the test, and people can actually compare reasonably our proposals in relation to addressing the unemployment core of the real economy, including liquidity and credit to small and medium enterprises, which is absolutely important. I think that in the end of the day, to finish, is that you might say to me, well, wouldn't AIB do this? And wouldn't Bank of Ireland, when they have taken so much of the state's money, wouldn't they be able to do all of this? Well, frankly, that is just simply not the case. Because, if you like, between 1990, if you look at the legacy of this, is that bank lending between 1998 and 2007 increased by 500%, and 67% of it was in property, and 14% of it was in interinstitutional lending. So what was left for the real economy? They have no record of lending to the real economy. And why should they now why should we now trust and say there has been such a change in culture that they're going to give up their old sins and they're going to start lending to the real economy? There isn't one shred of evidence for that. Now, Deputy, I think that in relation to this, you shouldn't believe me. I think that Deputy Gilmore, leader of the Labour Party, in moving our motion last night, quoted Professor Honohan, who said, I think it's fair to say, and what data we seem has to bear this out, that banks in Ireland reacted to their own difficulties and to the downturn by greatly reducing their risk appetite. Some of this was a necessary adjustment, but the result has been limited availability of credit for start-up firms and SMEs. Indeed, I have the impression that during the years of property-based lending, the banks have lost their edge in small business lending. And that's the alternative to our motion. Now, I finish by simply saying this. The results of what they did in that time was to make it impossible for people to put a roof over their heads in housing. because the ratio of, for example, the average gross salary to lending had gone up to about 8 or 9 to 1. When in fact most European comparisons say you have unaffordable housings when it's 3 to 1. So this is the whole point. That's the choice tonight. Address the unemployment problem directly, immediately, in the short term with shovel-level projects by the Labour Party proposal of the State Investment Bank, or say, well, they've all converted now, and if we wait long enough, the banks will repair themselves. Such nonsense.